Welcome to the Astute Prosperity Podcast with your host, John Wei. Join us as we interview successful business owners and professionals, uncovering the strategies that fuel their personal, professional, and financial success. Discover what it takes to thrive.
All right. So we have Joseph Wei on the call today, the Astute Prosperity Podcast.
All right.
Welcome, Joseph. How's your day doing?
Oh, doing great. Thank you for having me, John. I'm super excited.
Yeah, totally. I'm excited too. Finding more about you and also, your journey actually up to this point. So let's see. So on the Astute Prosperity Podcast, we talk about, we kind of find more about you yourself, and so be yourself and just share with the audience, um, like things about yourself and sort of like and relating to real estate and multifamily. Okay. So with that said, um, like with regards to multifamily investing or real estate investing in general, uh, what is your share with the audience what your experience is so far, and also what does your portfolio look like now?
Yeah, sounds good. So hi everyone, I'm Joseph Wei, not to be confused with John Wei. I think a lot of people have been asking like if I'm related to John. I'm not. It's a different Chinese character.
Yeah,
But it's really cool that our paths crossed and
yeah,
really excited
definitely.
for this podcast. So yeah, a little bit about myself, my real estate journey. I started during pandemic with anybody else. I was just finding books to read and I came across Rich Dad Poor Dad, went down that tunnel, and that took me like into Bigger Pockets podcasts. I started going to meetups, I joined a few online communities. And so around that time I had a bit of capital, so I've been working in tech for a while, so I had a bit of capital where I was looking to invest, and I decided I had just moved back home to my parents' house in South Bay, San Jose, and I was like, okay, well, I'm earning a bit of income right now, maybe I should invest, and I ended up buying a property of 4 bedroom, 3 bathroom, single family house in San Bruno. So it was I essentially got it at like it was a pretty low interest rate, so 3%, 3 bed, and I got it at a 3 bed, 3 bath price too,
Nice.
because it had converted one of the garages into a separate room, and so I basically did a house hack with that. So I moved out of my parents, I moved into the house, I moved closer to the city where my friends were. I started living out one of the rooms, and then I found a few buddies, so I found a few friends to house hack it with, so they lived with me as well. And then that took me deeper. I started going out to more conferences. I was um, I went to like SaraCon, a few events, and then earlier last year I pulled the trigger on a flip too. So I wanted to kind of dabble in different forms of real estate. So I did a flip out in Hayward, so East Bay, and that was my first time doing like construction and rehab. And then yeah, just started going down the tunnel, and earlier last year I met John. After talking to him a few times, I decided to go down the syndication route and started looking at multifamilies out in different markets in the Sun Belt. So Dallas was a big one, and yeah, that led me here. And right now I'm looking to jump on two more deals as we underwrite, and uh, we were working on a deal earlier last year as well. That was really fun as well.
Yeah, totally. Um, Thank you for that. So kind of backing up before the multifamily route. That did so did you finish the flip, or that was done already, right?
Yeah, we finished the flip.
Okay, nice.
Yeah, it was interesting. That was a fun experience. I think it was my first time dealing with many contractors, and so some of them turned out to be bad eggs. We were like so smooth. We were so happy. We were like going ahead of schedule until we ended up doing landscaping. And this one contractor, he basically tore up our driveway, and then it started raining and was like, okay, I can't bring in concrete. And this particular house didn't have enough room in front of the house. Like it was on a busy road to park. And so none of the other contractors could get into the house when the driveway was torn up. And this guy just refused to come like over and over again. Um, like it started being sunny again and he didn't come back. And then we finally like got him to come out and like pave everything. And then like about a month later, we get a notice in the mail, like right when we were about to sell, that like a lien was placed on the property because the contractor didn't want to
Oh man.
didn't pay his subs, right? So the concrete company like came after us. They were like, "Hey, you didn't pay up," and then we couldn't sell the property. So that dragged out a few months. And turns out he was using a fake license too.
Oh my God.
So yeah, so always vet your subcontractors. And this guy also like we started having broken windows too when we tried to demand payment. It
Oh
was like
man.
a whole ordeal. But we came out of it like we like learned a lot. Yeah.
Okay, good. Good, good, good. Well, you came out of it and you learned and you got through whatever trouble you had and yeah, that's great. Came out of it clean and make profit. That's all
Yeah,
good.
yeah, yeah. You gotta
And
make sure
you
you get your lien waivers done. You gotta get your paperwork done for your contract.
Oh my God, dude, the fun part of real estate. Um, awesome. Well, big picture wise, like, now you've done the flip, you've done house hacking now, and you have experience in multifamily. Like, um, why do you believe in real estate? And then also, what made you choose to like sort of go forward and take a plunge into multifamily?
Yeah, it wasn't previously on my radar before because it seems so big and so scary.
Hmm.
Like 100 units, I haven't even done like a small multifamily. Like how can I consider that? But it was really until I started talking to you where I realized like there was so much upside to it, and it's actually much more achievable um than it can be done. So right, like the thing about multifamily is like it's you're not going in it by yourself, you're going in it with a team, and it's a team of people that you've built where it accentuates all of your strengths. So if you're a numbers guy, you're good at doing numbers, then you're the numbers guy on the team. If you're good at finding deals and sourcing deals, then you're sourcing deals. And so multifamily makes a lot of sense because there's just so much upside to it, where one, you have a large team, so you're diversifying the risk. It's stable, it's backed by a substantial asset. You get like all of the appreciation upside. Um, and I mean, like I guess for real estate, it's like people always need a place to live. It's like one of the oldest financial vehicles. Like people in during the times of the pyramids were probably buying homes and stuff too. So
Yeah,
yeah,
some kind of shelter.
yeah, exactly. Yeah. And I think the thing for multifamily is just like you're scaling yourself because when when you think about like scaling, like you're gonna run out of money eventually if you keep buying properties. And
Yeah.
there's a like there's four levers of scale. So the first lever is capital. You can throw more money at things, which
Mhm.
is what you're running out of.
Yeah.
The second lever is people. You can throw more people at something, and that can scale up the property. The
Yeah.
third lever is media, right? Like you can
Yeah.
market yourself on social media and get yourself out to millions of people. And then the fourth one is technology, which you can build like software for. And that's
Mhm.
those are the four levers. And multifamily is really good at tackling the first two, which is capital and people, because for capital, you're raising money from people,
Mhm.
and it's not just yourself, it's people that you can trust and people that trust you. And so
Yeah.
it's like building out these relationships and building capital through that way.
Yeah.
And it can also be through social media. So you can market yourself out through social media and like reach accredited investors that way. And then
Yeah.
the second is like I said, like the people, right? You have
Mhm.
property managers, people that are working for you that are full-time roles, not just like like a small percentage of their time is focused on property managing your property.
Mhm.
So yeah, it just made like so much sense to me. I was like, oh wow, like I don't have to compete against 50 other people to find a deal. I can just have one person that built up a bunch of great relationships with brokers and like not have to compete on like bringing down the price of a deal.
Exactly.
Yeah,
Yeah.
yeah, those were like some of the reasons.
Cool. That's actually great context. Thanks for sharing that, man.
Yeah, of course.
That's great stuff. Well, uh can you, so like for the people that may be newbies or may not be newbies, but like maybe for the people that don't know multifamily that well, uh can you share like sort of how do, let's say, like, we, there's two parts of multifamily, right? There's the limited partner as an investor, and there's the general partner as the deal sponsor or people that's putting the deal together. So from both sides, could you share like with the audience in terms of like what are the main, say, profit center for both investors or both parties?
Yeah, so uh profit center wise, there's like and this also goes for like many forms of real estate is like you have ways that you can make money and one is like cash flow. So that's also partially why multifamily is interesting is because you can cash flow. And then the second component of that is appreciation. So the house will appreciate over time. And we're looking at market trends. We're looking at numbers to make sure that like this is a place where this property can appreciate.
Mhm,
You're also looking at tax benefits. So what's interesting also about multifamily is because there's so much more above the earth than
mhm,
buying a single family, like you can bonus depreciate laundry machines and all these assets, fridges and whatever,
mhm,
that you also get a lot of tax benefits out of it. So the third thing that you can get out of this is like tax benefits. And then mortgage pay down is a big one where your income is paying off the mortgage, and that's also a big profit center for yourself. Yeah, so those are like the main ways. And I think the thing that and then also if you're general partner, you're also getting an asset management fee, and also like a greater proportional split of the profits. Um, but at the end of the day, it also comes down to like a lot of us also want to be LPs down the line.
mhm,
Um, it comes down to time, knowledge, money, right? And if you're somebody that has a lot of money and not a lot of time and not necessarily a lot of knowledge, you can go in as an LP and gain that knowledge over time. If you have a lot of uh, time and you want to manage the deal and you also want to already have a lot of the knowledge, then you can go in as a GP. So
mhm.
those are kind of the like little levers that you can pull at like figuring out your role within the operation and where you want to make the money. Yeah.
Yeah, yeah. Now, would you have any advice for people maybe that's never been in a multifamily syndication or never invested in multifamily? Or what should a limited partner be looking at or looking for, um, in a deal like to potentially invest in?
Yeah, main thing is the people, right? You got to trust the people that you're investing with. And you need to ask, like, you need to figure out their history. Like a really good question to ask the GPs that you're looking to invest on a deal with is like, how have they done during a recession, right? Like during times of downturn, right? And because when the market's going up, everybody goes up, and so everybody looks like a great investment. But it's the real indicator is like when they're going down, like how well did their investments go during that time? And
Right.
that's like a really big question I would ask. And then it goes back also just to the relationship. Like, are these people that you can trust? Like talking to them, like how they treat matters. like even if they made mistakes in the past, how did they learn from them? How are they safeguarding themselves again? I think if they paint like a very rosy picture, it's all perfect and they don't have any stories where like these things fail for themselves, that's a very
Mhm,
big red flag. And so
mhm.
that's what I would look out for is like you want to be talking to people that can admit their own weaknesses. Yeah.
That's awesome. That's actually a good point. Great point. Um, totally. Being vulnerable and transparent. Actually, I think that's really important.
Yeah.
Um, so what about when we talk about multifamily syndication, some people um, have experience in joint ventures. So in your perspective and your experience, like, can you share what the difference is between joint venture versus multifamily syndication?
Yeah, joint venture usually refers to probably a smaller deal, I would say, in my mind. You're basically going into a deal with a limited set of resources. So let's say I have a lot of knowledge on how to handle this deal, but I need capital partners to come in with me. Then I need to pull someone in that can fit that role of capital. Um, and it's different for every deal, right? It doesn't necessarily have to be real estate. It can be business as well, but real estate is a form of business. So in the context of real estate, we're talking like I have some money, I need somebody else to fill in the additional roles on my team, right? And that's essentially what a JV is like, is figuring out where you can contribute to a project and what are the missing gaps and who can you bring in to fill in those gaps. And usually that involves a lot of time for both parties, I would say. That's
Yeah.
like a big one. And then also like you're taking on the risk and splitting that with the other person or however many people that you're doing a joint venture deal with. Um,
Mhm.
so yeah.
Awesome. Good, good, good. Um, well, I think those are pretty much all my questions for our time today. Would you to sort of wrap up the podcast or this podcast, if you were to give one advice to the audience, what in terms of let's say multifamily investing, what would that be?
I would go out and start talking to people, right? Like going out to meetups, meeting people like John and just casual like literally my first meetup that I ever met that I went to, I met Tony Lin, who is also a syndicator, and they're usually like people that are really successful in real estate are huge givers, and they're the types of people that share so much knowledge with you. And so when you talk to somebody like that, they're happy to share like everything that like the banks of knowledge they have with you. And then
Mhm,
at the end of the day, it's your own path to take, right? And multifamily is one of many vehicles you can go into. It's what I ended up choosing after dabbling in so many, but the path is different for so many people, right? Like
mhm.
you could just be interested in STRs or long-term rentals, midterm rentals. There's a path for everyone, and I think going out to meetups and going out to events to start networking with people is like the number one way to start and figure that out for yourself.
That's awesome, man. Great advice, dude. Great advice. Well, thank you so much, Joseph, for being on the podcast and giving so much good insight, and also sharing with the audience and myself, more about you. And I can seriously um, say that over the past I would say not yet a year, right? Probably about 9 months or so.
Yeah.
That
Up
I've
for a
that
baby.
Yeah, yeah. That we know each other. I think it's you've made so much growth in the multifamily space, actually, and I feel like your future is limitless. I should say. So I look forward to seeing the growth potential. Um,
It's
to
because
come
I have
together.
good mentors. So,
Thanks, for sure, for sure. But yeah, thank you, man. Appreciate your time today, and appreciate you being on the show, and look forward to your limitless future, man.
sounds good. Thanks for having me, John.
Thanks, Joseph. Talk soon. Bye
Bye.
bye.
You've been listening to the Astute Prosperity Podcast. Want to be featured on the show? Head over to astuteprosperitypodcast.com/guest and apply to share your success story with our listeners.